Hello everyone. Welcome back to the Aftermath Show. It's your host Kamunga Pai, the insurance guy. I'm always happy when I get to meet you people, talk about life challenges, things that happen in life, and see how we can overcome those things. Now today's topic is a little bit emotional and eye catching. Yeah, for the people out there who have children, guardians, parents, you gotta listen to this podcast and watch it and see how that benefit. I have a guest, a lovely Evelyn Nava. She's going to introduce herself and tell us about, some things. The topic is about basically children's education insurance plans. How can a parent secure their children's education? Even during the course of the conversation, I was telling my story about, the children's saving schemes when it comes to insurance policies. So, Madam Nava, you're most welcome to the show.
Thank you very much. Once again, my name is Evelyn Nava. I'm manager at Old Mutual Life Assurance Uganda. I'm glad to be part of a show, and I'm a parent of two, above all. I'm not only a parent, but I'm also a client of Old Mutual for education, Somesa Plus, and the investment policy.
Okay, thank you, Nava. Actually, on that same note, today's topic is about securing a child's education. I know which has a product called Somesa. So you have to tell us how the Somesa product works from first principles, so our viewers out there can benefit from it. For the parents, guardians of children, are able to secure their children's education, they can learn. So tell us about how that product works.
Thank you very much. First and foremost, Old Mutual, one of the top one, it's the biggest life insurance companies. Old Mutual is a global company, originating from South Africa, and we are part of Old Mutual South Africa. So when you talk about Somesa, the education plan, for me as a parent and a customer for Old Mutual, I'm so hearted and very happy to talk about this product because it speaks into my interests, and not only as a customer but also as a parent. Just to take you back, why would a parent or a guardian think about an education policy? Many of us do not think that education is an obligation. In Africa, actually, when you compare education to the developed countries, when they're preparing to start a family, most of the crucial things that couples discuss is education. So that's why you find that the education levels in Africa, maybe to mention my country, Uganda, you find some regions in this country where education levels have dropped out. If you look at the statistics and you look at the number of people that drop out for the girl child, actually, most so like places in Busoga, they have so many teenage mothers. So people just stop along the way and they just move out of education, and they drop out. Taking you back, but when you look at Europe, before couples think about having children, they think about how they're going to educate them.
Wow.
They think about what exactly we're bringing into the world, but how are they going to, be educated? Because for them, they look at education as an obligation, as a parent, but also education is an investment that you cannot put aside. Where if you're constructing a house, you can put construction aside, but with education, you have to go all through all until when you see the child finish at least their first degree. It's not the case in Africa. Kids struggle, but above all, also if you don't plan well to say that you have an education plan like we're going to discuss, you find that if you're not in the world, if you're not here anymore as a parent, then your child's education may stop.
Shattered, yeah.
Yeah, it may be shattered, it may be deterred. Even the dreams that you have, the plans of taking out your children out of this country, may just stop all of a sudden.
Yeah.
So the education policy, when you look at it, it's something that we're encouraging parents and guardians that alongside your investments that you're doing, I've met a couple of people, parents, and you're talking about education policy, and somebody says, I have my rentals. I say, okay, rentals are good.
I have my
Rentals are good. But if I take you back to COVID, people, the most, I think, affected areas in this, in Kampala or in Uganda, are actually globally, was real estate.
yeah.
Yeah, the tenants stopped paying. Even here, we had where the government said that, you know what, you have to leave the clients, the tenant, without paying rent. In arcades, people stopped paying rent
Yeah.
because they were not
Working.
so if you, as the owner or the landlord, you're just waiting for the rent, and you're quite assured that your child's education is only guaranteed on the rentals that you have, or the buildings, the structures that you have, then probably it's not the only thing that you can have. The beauty about the education policy and how it works and what it is, especially for the Somesa education plan that is for Old Mutual, it is quite different, and it gives a very good value proposition to our customers because, one, we're the only ones in the market who have a guaranteed product, which means that from the onset, if I plan well, because it is structured in a way that it caters for primary, secondary, and even university. So it means that as a parent, if I'm taking out this policy, I know exactly when I want to cash it out and when it will be handy for me to look up to pay this child's school fees, right? So one, it is structured in a way that it has an accumulation phase. The accumulation phase speaks into the saving period when I'm paying school fees at school for my child. However, I'm putting aside a certain amount of money with Old Mutual. That money I'm putting aside, it's not only saving a bit about it, it is also attracting bonuses. It accumulates bonuses. That's why it's an accumulation period. So that is the phase, and that is a feature about it. So as you're paying school fees for your child, you're also saving for the future. It's fixing to the stage where you want the school fees to be cashed out or what you're planning. So what does that mean? So it has an accumulation phase which runs from 5 to 10 years, and that can begin from childbirth. When you give birth to your baby, come and start saving with Old Mutual. Put away some money. That can speak into primary. You can look at a school fees plan of 6 years, which means that once your child clocks 6 years, they start in primary or year 1 in the Cambridge setting. Yeah, you can cash as much money available for school fees. Then the secondary, then the university. So it moves from 0 to 18 years for the child to be insured. Then it has what we call the payout phase. So once you're done with your 10 years, you're able to cash out policy. And this is structured in phases. We structure it according to what the parent would wish. Is it on a timely basis? Is it half yearly? Is it annually? So how do you want your school fees to be paid out once the policy has come to maturity?
Yeah. Okay, that's nice.
Okay.
So a scheme runs from 5 to 10 years.
It's absolutely.
And the base rule is just to decide how long will I save that money for.
Exactly.
Yeah. What other benefits come along with just with saving money with Old Mutual or with an education policy? Are there other benefits that come along the savings? Tell us about the other benefit.
Yeah. When you look at the policy, like I said, and that makes it quite different from a savings. So it's not a savings, it's just why we call it an education plan. And this speaks into, you'd want to relate it to an education fund. When you read about education funds like in America, in Europe, education funds are, you start saving up for them. They call them education college funds, where parents start saving for college because they have the university, maybe they have the primary where the kids study for free.
For 3 years.
Yeah. If you want to go to a public school, it's free. If you want to go to a private, of course, you can pay. So the SEM, it's not a saving scheme as such. It's a plan, education plan. So, and also to mention that the phase for paying out is 4 years.
4 years, yeah.
Minimum, maybe maximum. And then the other benefits that come along with this plan are the life insurance.
It is
Life
insurance in
Yes.
the scheme.
So this makes it different from when I get my money and just put it in the bank. If I got the money again and I say that I want to save for university, I'm going to put it in a unit trust fund. There are benefits that I will not enjoy at a unit trust fund.
Absolutely.
If I say that I have my money today and I want to put it away for education and I invest it in a treasury bond, there are benefits that will not come along with the treasury bond that you're going to enjoy in the education insurance policy.
Wow.
What are these benefits? For instance, if I compared myself, like I'm saying, a unit trust fund is a portfolio of investment, a treasury bond, you don't have a life cover. A life cover means that when I'm saving my money for education for my child, it means there are uncertainties that I may not cover. It doesn't mean that when you're saving or you have an education policy, you're not going to pass away. Yeah, you can die.
Anytime.
Yeah, you can die anytime. Death is a journey that we move with, but it's part of life. Then it doesn't mean that you're prone to accident. I mean, you're immune to an accident. Sicknesses,
Critical illnesses,
mention cancer, stroke, anything can happen as a parent. But anything that happens to you as a parent, remember your obligation is to educate your child up to 23 years, 21 years, up to when they're done with university. So if this happened along the way, it can deter the plan. It can just change the whole entire plan. Kids will drop out of school if you died.
Yeah, true.
So this education plan comes with a life cover.
Okay.
So that means that if we lost the guardian, we lost the guardian or the parent who's saving with Old Mutual, it means that we have a percentage, which is 10% of the main benefit that we pay out. The most interesting benefit for me that really caught my eye about this education policy was the child income benefit. Wow, the child income benefit. Because when you look down here, I mean, in Africa, when you look at the rich people who we've had their names being mentioned, I mean, when they die, that's the end.
Yeah.
You're a business owner, you're a proprietor, you're a landlord. When you go, you go. Yeah.
Business.
And most of the businesses here, sorry to mention, but they're all operating on loans. People never know about that.
Yeah.
But people's businesses are surviving on loans, which is okay. But again, when you die, the banks will come close because the business itself is the collateral.
Yes.
So when you go, the people you left behind, your wife, your family member, cannot now even get the money out of that
Business.
because these businesses survive with you. You're the proprietor, the banks know you. So when you go, sometimes even the business relationship with your customers goes. So when we have a child income benefit as part of the education plan, it means that when you die, at least there's continuity for school fees. That is very key. There's continuity, which Old Mutual will come in at the anniversary of death, like 1 year after, and we're going to pay a 12% annually. And we're paying it, imagine, to help the child continue their school fees. So which means that even if I was a stable mother and I lost my spouse today, and I need to know what next now, because I'm a stay-home mother. That means the income that has been coming in now has stopped.
Yeah.
The business has to survive. The workers have to work, the factory and everything. There is continuity from the child income benefit. Old Mutual will pay you school fees for that child for the remaining policy term. So, for instance, if I took on, like I mentioned, it's 5 to 10 years. If I took on this policy and it is 6 years, and you lost your spouse, I lost my spouse maybe at 3 years, from the 4th to the 6th year, Old Mutual will be paying out the child income benefit, which means that at least there, the child is still in school.
Yeah.
Then at the maturity, where we said that this policy has a payout, Old Mutual will pay out the expected lump sum.
Wow.
Which would have been paid maybe when my spouse was allowed. So, I mean, what more can you get from?
What investment can you get from that?
Exactly. This is guaranteed. I even know that I'm going to get, which I cannot even guarantee in the rentals. In the tree planting, yeah. I hear people talk about tree plant. I always tell people, yeah, it's a very good venture, but for me, it doesn't matter. It's like telling me about poultry. I don't know, because I even hear people steal chicken. So when you steal the chicken, people can steal chicken and the chicken don't make noise. And they can take them like that in the night. You wake up without all the 100 pork. The chicken has gone. What more do you need if you don't take on a guaranteed policy like this? Then the last one is the child income benefit. We say the waiver of premium. So if the parent or guardian passed away, it means that the family or the next of kin are not entitled. They don't have the obligation to pay the premiums that we're paying. Remember, the policy pays on a monthly, half-yearly, quarterly, or annual, like I mentioned previously. But here, if you don't have the policy owner, though they're insured,
Yeah.
the Old Mutual will waive away the premiums. So which means that you are even benefiting more out of this policy. So that means that the premiums supposed to be paid are gone. So those are the crucial benefits that come with it. But for me, above all, it is guaranteed and has the child income benefit.
Wow. I mean, you've managed to save money throughout the 5 years or 10 years.
Yeah.
The policy matures, you get your money back plus the bonuses, then you have peace of mind.
Exactly.
So money will be available.
Exactly.
The other benefits we talked about were in case the guardian or the parent or the client passes away.
Yes.
I mean, we are paying this person's funeral expenses.
Exactly.
Or 10% of the target.
Yes.
Then plus the school fees that comes in every year.
Every year.
Up to maturity.
Exactly. To keep the child in
school.
Yeah.
What happens after maturity? Do you still pay out that money or it
Yeah.
stops there?
No. After maturity, I'm talking about the child income benefit. Yeah. After maturity, the child income benefit, of course, it's a benefit on top of the maturity benefit payout. So that will stop immediately. And then the final pay, the expected maturity benefit, which was guaranteed
At this.
at inception, will be paid out to
Wow.
the client.
Wow.
Basically, here, the dream of the parent, even when they passed on, if they had a dream to take their children to Leeds University, I mean, it's not going to die. And education is the best investment you can give your child because you can leave them with all these rentals, all these buildings. But if they are not part of the plan, these kids will grow and sell them. Your relatives will sell that house. We've seen them. We've seen mothers they've thrown out of houses. People without sentiments, without your dream, they can't do anything. There's a saying I always people say, "Omusikate yeyanza." So these people will go with your money. But education, the education policy, the education plan, nobody is entitled to this money. Even when they're looking at the estate, what the deceased left behind, they said, does the deceased have any insurance policies? And if yes, and for us, we'll give the money to the next of kin. Actually, we don't even give the next of kin. We are obligated to take the money to the school to ensure that the child exactly is in school. Because we don't want you to take the money and get excited as the brother to the deceased or as the wife and do whatever you want to do. No.
Okay.
Yeah, we make sure that the child is in school. So education is continuity.
Wow. I mean, a parent out there or a guardian, you have children. What reasons do you have not to buy an education insurance plan? Based on what Evelyn has told us, the benefits of having that insurance plan. Now, as we finish the show, I'm just telling my story. I tell you the reason why I invited you here. Yeah, I personally have that Somesa Plus, and I have 4 children. And every time my children are born, I buy them that child education plan. And my firstborn, I usually do 7 years because I assume 7 years will be in P1.
Yeah.
So my firstborn, the firstborn is matured last 2 months back, about in August. And when my child was going to P1. So man, I was freaking happy. Save money 7 years back. Now I'm getting a maturity. Deserve money for reinvestment, open my school fees to a school. Yeah. So I'm very, very happy. Unfortunately, I not die, but if I died, God forbid, my children, yeah, my wife knows that, if I die, my children will be carried up to university. So no, don't get worried. Yeah. So the product is very nice, and I want to appreciate you for coming through and telling us, how it works. Yeah, but next time I will invite you and tell us your story, how you said you started on to your journey of your child's saving scheme. Yeah. So please share any questions on our on this video. We are there to support you, guide you. For those interested in buying the child's policy, we're here at your service. We're willing to support you. So Nava, what are your parting shots in this show?
For me, I would want to encourage parents that education, like I said, I never stop telling people, education is an obligation. It's a right. It's a right for the child. And you have to educate your children. But above all, if you can afford not to compromise in the standard of education that you want to give your children, plan for the children's education. Plan for it, give them the best. If the kids go to the best schools, by the way, because, people talk about the luxurious life for people in international schools, what and what. But I'm telling you, when they come out, they have a different experience.
Absolutely.
Exactly.
Yeah.
They will not be the same as who went there. People say that it's okay, I'll come out, even I'm here, I went to this school. But yeah, you have your story of that humble background in that school. But even as a parent, you can afford to put away some money.
Some money, yeah.
Put it away. Give your child the best education. Because, when they have the best education, you'll have the best out of them. When you take them to the best universities, you'll get the best out of them. So what more can you give them apart from education? When you educate your child, they have no reason to say that my parent did not
Good. Yeah.
my parent did not give me what I needed. Education is the first investment that you can give your child. Building your children apartments, without giving them the best education, is a waste of time. They will grow. If they drop out of school, they'll use the apartments to survive. They'll sell them and they'll use them as collateral and they'll go. And they'll just sweat. be done, and it will be no more. But education, they'll move with their degrees, they'll move with their masters, they'll with their PhDs. So I don't think that it's an option for parents not to buy these education policies. They can have them along
Other investments.
other investments that they have.
Yeah.
But life education policies with the benefits that we've discussed,
Yeah.
I don't see where you have an option where you opt out of not having sports. So I urge every parent there, guardians, look at it. And also wives, encourage your husbands to take on these policies, because at the end of the day, it is you.
Yeah.
I hear some wives saying no. And I look at a woman and say, you mean you're objecting this? What happens if your husband is out here?
Yeah.
Do you even know the bank slip, how it looks like? There are women who don't even know how a bank slip looks like, because the man is paid. It's not her job is to pick the child from school. So the day you face a bank slip and you start signing it is when you will know that you needed an education policy.
Yeah, thank you, Nava. It's been an awesome session. Hope the viewers have learned something. We're waiting for your quotation request, yeah, about these plans. So thank you, Nava. Hope to see you some other time.
Thank
Yeah. Thank you, people. See you when you see me.
Bye-bye.